Welcome, trader, to the next video in Order Block Mastery, Decisional Order Blocks. Want to get right into it? We got a lot to cover, so let's dive right in. All right, so lesson overview. What you guys can expect today and what you will be learning are the various types and purposes of decisional order blocks, where decisional order blocks are located within the multi-time frame structure for both continuations and reversals, how to properly apply the various decisional OBs and multi-time frame analysis for the highest quality trades, when to use specifically decisional OBs for high probability trading setups, decisional OBs versus extremes. And before we get in, I want to just make very clear to everybody, while we're going through and you're going to be learning all these concepts, it doesn't mean that you are going to be utilizing everything and, trying to, make sense of, what's the best. It will all be laid out for you exactly as I trade myself. And as I've mentioned in previous videos, the only way to become consistent starts with your strategy, starts with your approach, making sure you're selecting the right points of interest, right? Extreme, decisional, understanding that by doing the same thing over and over, that's the only way consistency is going to be present. So even though you can make sense of anything in the charts, doesn't mean that you should always apply it that way. So with that being said, disclaimer, decisional order blocks are the least probable OBs. So it is critical to make sure that they follow all of the sequential setups that I'm about to walk all of you guys through. All right, let's get right into it. All right, so decisional order blocks, what are they? As you now have learned, extreme order blocks are the order blocks that lie at the extremes of structure, lying at lower highs in a bearish trend and below or at higher lows in a bullish trend. Now, while they're case sensitive, what does matter is identifying always the correct structure. Now, the same rules are specifically going to apply when applying decisionals, because if you identify the wrong structure, remember, everything else that follows is bound to fail. So decisional order blocks, what are they? In any given trading range, bearish, bullish, internal trend, main trend, counter trend, all the above, order blocks lie only at the areas that have the highest degree of logic. So wherever you see price expansively move away from, whenever you see a big sell-off created, or a big bullish run, you want to start training your eyes to think about magnets. All right, here's a huge expansion. Where is my focus going to? It's going to that single candle of supply and demand that instigated and started that expansive move. So decisional areas are the second place where an expansive move happens. Extremes are the first instance where an expansive move happens. So if you're in a bullish structure, higher lows are where extremes lie at the extreme retracement of the trading range. Your decisionals, on the other hand, they come before the extreme. So while extremes are a steep retracement of the overall trend, we know that price does not always have to go there. If you've done fib trading in the past, 32.8 or 23.6, 50 premium discount, all that's going to become irrelevant because decisional order blocks tell you why specific fib levels work. Now, that might be irrelevant at the moment. Decisional order blocks are kind of like the second phase of defense. If the extreme order block does or does not work out, the one that always is going to come before extreme is mitigated is going to be the decisional. Now, the decisional order blocks, as you're going to learn, when applied correctly, they have actually higher probability than extreme in case-sensitive scenarios. But to understand why they do, we have to go through all of the external factors, some of which will be covered in this video. Others that will tell you all of the why behind will be in the section about liquidity. So now that we have a base understanding of what decisional order blocks are, you're ever only going to be identifying 2 order blocks for a given range. Within a bearish or bullish structure, if you've ever identified, 3, 4, 5 order blocks, you need to know that not all of them are valid. You're going to be seeing order blocks all over the place. But what validates order blocks partially is going to be structure. So ensuring you're on the right side of the trend, ensuring that you have all of the proper setups that we're about to dive into here in a minute. And decisional order blocks almost act as a turning point. It's like price made a last minute decision before continuing the structure that an extreme made. So let's see what they actually look like in these setups. All right, so decisional order blocks in bullish continuation structure. Conceptual understanding. What and where are decisional order blocks in bullish continuation structure if we are looking to buy? Decisional order blocks are the structurally supported order blocks that lie before the extreme order block. They are the second meaningful internal push that creates an expansive move. All right, they're the second meaningful push that creates an internal move, as you're going to see here in just a second. Decisional order blocks, on the contrary to extreme order blocks, they lie between the 35% to 70% retracement of the overall current trading range. So if you're in a sell trend, you want to be identifying your decisional order block between 35% retracement of the range to all the way to 70%, because anything above 70% retracement we know is going to be an extreme order block. What makes decisionals very key is that decisionals have multiple different types, some of which even previous students may be exposed to today for the first time. While you are going to be learning all these different types of decisionals, let me remind you, doesn't mean that you're going to be trading all of them all the time. Just throwing that out there. So compared to extremes, as you're going to be seeing at the end with our takeaways, we have noted here that decisionals must have 4 key features of a valid OB, except number 3, meaning 3 out of the 4 core features of valid order blocks, such as imbalances, the order block sweeping liquidity, to the order block creating an expansive move and having liquidity lie before it. One of those does not need to happen. In this case, that is liquidity being swept. Decisionals oftentimes will actually not sweep liquidity. There's going to be a single candle, potentially sometimes in the middle of nowhere, but have very high logic, and that's when you're going to anticipate to be liquidity swept into it, not the candle itself taking liquidity. But more on that later. As I've already mentioned, they are the lower probability order blocks. So you'll see here in just a minute. So the first type of decisional is our typical decisional, what we traditionally want to see. And in a bullish trend, they occur before new higher high structure is made. So if we're bullish and we see that we have a higher low, that makes a higher high, we know that an extreme order block is going to be lying somewhere down here. And this ends up being right that 75 to 99.9% retracement of our bullish trading range. In the typical example where we want to see decisional order blocks, they are almost like the turning point. The first area that we're going to have imbalance in the first expansive move that happens, meaning why did this whole leg happen? Well, it was a result of this extreme order block down here. But if we had to think fractally for a second, why did this move happen to create the next expansive push? That is the result of a decisional. Just had a minor pullback in order to then cause price to accumulate to burst through that new higher high. Decisional order blocks, it decided to make a higher high rather than reversing. Decided to have a little bit of a pullback before making the next expansive move. That's what we mean by meaningful internal push. First push, second push, that's where your decisional is. Majority of times, 80+% of the time, that is where your decisional is going to be located from a conceptual perspective when it comes to pushes. Now, I put a green dot here because it is important to note that this is one of the highest probability types of decisionals that we routinely want to see. Now, there are several different types, so let's just keep going through and identifying the most probable to the least probable and most advanced. The next type of decisional is after a higher high. So when we are in a bullish structure, when we have a high, higher low, we have a new higher high, this compared to the previous example, the decisional could actually be, it could actually occur after this structural high is broken. So notice this low broke our high. This is where our extreme order block would be. It's always going to remain in the same place, which makes it very easy. The decisional in this instance would occur after this high is broken. It'll appear just as a small pullback, then cause price to go higher. But notice the logic is still there. We have the first push for the extreme. Price then makes a small retracement and then makes a second push. Now you might ask, well, Griffin, isn't this structure, isn't this a new high, higher low, higher high? Yes, it is, but not on this time frame. That is going to be internal structure to this bullish push that we see. And one of the reasons why this type of decisional is so great is because oftentimes you're going to have a decisional that looks like this on maybe a higher time frame, but it'll end up being a lower time frame internal extreme order block. That might be confusing for some of you guys initially going through. All I'm saying is think about market fractality. You're going to have right that high, higher low, higher high, higher low, higher high, higher low. This internal higher low on, let's say, a 5-minute, that could be the extreme within our maybe 15-minute range. And that extreme actually ends up being our decisional in this instance. So that's a double confluence that provides really good opportunities to take decisional trades from. Something about this is that more likely than not, this could end up being a very long-term move, especially if we're going to the moon, right? But what this could also end up being is a short-term reaction, a short-term move for then price to come back down to the extreme and then to go higher. A little bit more sophisticated. We'll go through it later on. So the difference between this one and this is that the typical decisional happens before the higher high is created. The second type of decisional occurs after the higher high is created, and it's a double confluence because it's also an internal structure, higher low makes a higher high. Now the last type, which will be new to majority, if not all, this is what I consider a major imbalance, or there's no clear decisional. When you're dealt with something in this case, what you're going to realize is maybe it doesn't matter what time frame you're on, you just see a push and you don't see any pullback. Well, you still need to know that there could be a valid decisional, or there might not be a clear decisional at all. And that's going to be case sensitive as we're going to walk through, when we apply these. But when you see this higher low that makes a higher high, your extreme is still going to be there. Now what happens is because we know that within 30 to 70% retracement of this bullish range, we can expect some form of decisional. What we're going to do actually is we're going to go through a lower time frame, not the 1 minute, the 2 minute, but if you're on maybe the 1 hour, go to like the 30 minute, the 15 minute. And oftentimes what you're going to see is you're just going to see a single candle, and it could be hidden. Oftentimes it could appear as an imbalance to someone who is brand new or inexperienced in that sense. And what it's going to look like is you're going to find a candle that looks exactly like this. Now there's some specific criteria for this, so let me go ahead and share with you. When you see a major imbalance happen from here, you can almost 9 out of 10, 10 out of 10 times expect it won't work out because everyone's going to be looking there. So we need to be the detective and figure out where's the cheeky decisional, where's it hiding. So this single candle actually ends up being our decisional because of 2 reasons. One is we have an imbalance. We have the first imbalance right here. We have the second imbalance just after. So this is a more advanced concept, but still going to touch on it because you guys will be able to study. When you're identifying this decisional, a lot of people would initially say, oh, well, here's my first imbalance, here's my decisional. That is not the case when you are looking after a major imbalance. You want to identify the candle, this single candle, that has 1 imbalance in it, and then 1 imbalance after it. So a total of 2 imbalances. You want to select the candle that cuts those 2 imbalances in half. It divides them. that is the major imbalance. So this one is much more advanced. If you're just learning these different types of decisionals, I would heavily emphasize don't worry about this. These are the two most important. But when you become more advanced, especially when I have some of my stack entries, sometimes I'll use this method. But for the sake of time, study this, come back to it, and we'll see how to apply it here just in a moment. So these are the three different types of decisionals in a bullish continuation structure. Always identifying that single candle that caused the first or the second internal push that creates that new structure. Now let's apply these three types of bullish continuation decisional order blocks, and let's see how they actually look on perspective from a chart. So our typical decisional, what we always do is identify the structure first. And remember, internal, main trend. Over here, we're just identifying one structural range to give you an idea of what it looks like. So we see that we have a high, we have a higher low, we have a higher high. After this high is broken, we know that we're going to be looking for buys. So always make note of where your extreme is and where your decisional is. In this case, since we're identifying this trading range right here, we see that we have some form of extreme down here. This is that last order block with imbalance right here that ends up causing price to be the catalyst to break a new high. So once this high is broken, this is our first responsible order block that caused that first push. Now, where's the order block that caused the second push to break the high? Where's that order block located before this high is broken? Well, it's located right here. You have your first push, you have your second push, and that's where your decisional is. Some of the highest probability decisionals are going to be our typical decisionals. And we can clearly see we're in a bullish trading range. Price comes back within our range, mitigates our order block, and then inevitably does what? Ends up continuing to make new bullish structure. Our second type of decisional, one that forms after or closes at a higher high. So here we can see we have a high, a higher low, and then we have, you might say this higher high, but if you notice, this wick is actually higher. And if you have trouble still recognizing structure, which is imperative, it's essential before going to order blocks, please refer back to the multi-time frame structural analysis and wave theory video. We have this higher low and we have this higher high up here. Where are the first two pushes that are caused as a result of this bullish trend? Well, the first push we can clearly see happens here because it broke this structure. So our extreme naturally is going to be where that first imbalance is. This would be our extreme order block. Now our decisional in this case, we have our first push, we have our second push, right? This would be our decisional. And what few things actually gives us incentive that this is the decisional? Well, one, it actually does sweep liquidity in this case, and it doesn't have to. That's a very pressing factor to take into consideration. Second of all, is that the order block itself was formed after the high was broken, telling us it's going to be, decisional type 2. Very good. Also, we see we have some form of liquidity lying before it. Of course, you're always going to have that. That validates it. And that's how we would approach this decisional. It comes very intuitive the more often you see them, and the more you will just adapt the price so much more efficiently based off of your previous experiences of what has worked, what hasn't, learning from the past to apply properly in the future. So your extreme, you have your decisional. If you guys might have asked, well, why is this not a decisional right here? There's a few key reasons why this is not a decisional. Because you might say, well, here's the first push, here's the second push, and this is the only one with imbalance. There's one key reason why this doesn't work, and you will learn in the next couple sections. So this is not the valid decisional, right? This one is because we had this is our first imbalance, first push, price made a pullback, the second push. Always think about it. Where's the second push coming from? Comes in from right here. Decisional is mitigated, of course, makes new higher highs. Now the third example, of course, going to be the major imbalance or the major expansive move. In this case, we see that we still have higher low, higher high structure. And where's our extreme within this range? Well, this order block was mitigated. This one was mitigated. There's no imbalance. So the last imbalance ends up being right here. So in this instance, there is only one order block before the high is broken, and that's always going to be the extreme. What does price do then? Takes off. So we see this is where the first push happens. Well, Griffin, there's no retracement. There's no pullback. Where's the decisional? Like I said, sometimes there might not be an obvious decisional. So that is why I have been able to identify over the past 2.5 years this specific type of decisional. So like we talked about, a single candle that might appear as an imbalance or give the illusion of it, it's actually an order block itself. So it's a more complex understanding of decisionals. So we see that we have the first imbalance here. We see that we have our second imbalance here. And we also see that this candle, like we said, if this is our first imbalance, we know that's our extreme. This single candle decisional, it actually divides two imbalances. We have the imbalance that lies above it, and we have the imbalance that lies within it. That is our key right there. That is our key. This is our valid decisional. And of course, what does price do? It goes higher, comes down to mitigate the decisional, and then continues to go higher. This is a very advanced concept. A lot of people majority of people will never be able to see this type of decisional on their own. And it took me, again, years to be able to identify this one. So if it's a little tricky, don't go all gas, no brakes. Master these two first, and maybe you can come through with this later, but it is not essential. It is just an extra factor to consider as your analysis and your skills become exponentially better. So now that we've had an opportunity to apply them conceptually, now let's go to the trading view charts and let's see how we can apply what we just learned. All right, so we are looking at GU, and we're going to be applying the buy scenarios. So over here, we see that we have a high, higher low. We see that we have a higher high. Now, where in this instance is the decisional? You might notice that whenever we have our proper structure identified, I always do the same thing. Structure, extreme, decisional. Where's the first push? Where's the second push, right? This is where we have, right, that first, major push. But if we notice where all the order blocks, is there any imbalance before this high was broken? No imbalance, no imbalance, no imbalance, no imbalance. Oh, we have an imbalance right here, right? So this would be our extreme in this case. Our decisional is where that second major push comes in. So we can actually view this as the first push, price comes back, and this is the decisional that was responsible for actually breaking this high aggressively. And if you see, what ends up happening is price, will play around a little bit, but then it'll inevitably come back down to this area. We got a few key reasons why this is so perfect, and you're gonna see this exact example in the future sections. So we see this decisional. This is the decisional type 1, our first type of decisional. It causes the high to be broken rather than forming afterwards, right? So this is that decisional. Price comes back to mitigate it, and then of course, this is where you look for trading opportunity, and then price inevitably ends up making new structure after the fact, right? So now let's look at the other two types of decisionals right here. So our next type of decisional, we're going to be looking at our type 2. This is where a decisional occurs after a high is broken. So in this case, we have structure that looks like this. And again, squint your eyes, make it obvious. That's the biggest tip I can give for structure. You have a high, you have a higher low, and then we see a huge push to the upside. So our current trading range is from this higher low to this higher high. When this high was broken, is there a decisional that lies before it? No, there's not a decisional that actually lies before it. Okay. Well, if there's no decisional that lies before it, then that tells us this is the extreme, so the decisional must be lying after it. And if we see after this high is solidified, where's the decisional that causes the second move? Meaning if this is our first imbalance here, where's our second imbalance? Our second imbalance is right here. Great. The last thing we need to ask are where the pushes, where is the main push and where's that internal second push? We see that first push is right here. I'm not going to do that. Our first push is right here. We see price have a small retracement, and then it pushes again. This is the only order block with imbalance, so this is our valid decisional coming in with, or resulting, my bad, and that decisional type 2, the decisional located after a higher high has been broken. Price, of course, mitigates it once, comes deeper into it, and then releases to inevitably, right, make new bullish structure. Now the type 3 decisional, let's look at it. Same thing here. What's the structure? We have a high, higher low, we have our higher high. Great. After identify the structure, where's the extreme? We see an extreme that makes higher low, higher high. Well, here one was. The imbalance right here was completely filled. We had another extreme that was completely filled. And then, of course, after this, we had the impulse, right? We had the impulse immediately after. After that impulse, that tells us this is the extreme, right? There's no decisional that lies within the higher high, telling us there has to be a decisional after it. So if this is where that first major push came in, do we see another second major push within here? No, we don't. We just see this low make this high, which tells us this could be a type 3 decisional. It's either going to have a single candle that divides two imbalances, or it's going to be, there's not going to be one. So do we see one candle that divides two imbalances that's meaningful? Well, if this is our extreme, we see the first imbalance, we see the second imbalance, right, that lies right in the middle of this candle, and then we see the next imbalance, the third imbalance after. So as per your notes, if we have an imbalance that lies above an order block and an imbalance that lies within it as well, that tells us this is the right decisional. And this was actually our example that we used for the conceptual analysis, and that's why this worked so flawlessly, because it worked extremely well, right? So this is how you would apply the first 3 types of decisionals within bullish continuation structure. Now let's go back to the presentation to keep learning more about decisional order blocks. Now that we've applied and we know a little bit more about decisional bullish order blocks, it's now time to talk about what decisional bearish order blocks are and bearish structure. Conceptual understanding. What and where are decisional order blocks and bearish continuation structure? Similarly to bullish continuation structure, bearish order blocks lie before, and always will, they lie before the order block. And when I say before, I mean when you're looking at things structurally, as price is coming back into the range, that decisional order block is lying before that order block when price is coming back into the range. And I'll explain here in just a moment. Likewise, that decisional order block is the second or next meaningful internal push that has logic. Still that 35 to 70% retracement. And we have similarly the 3 same types of decisional order blocks for bearish as we did for bullish. All of the key features must be there, except for the third one, which is your order block, your decisional order block does not and will not always be taking out liquidity, but it requires the other 3 factors. So inversely, we can see if we're in a bearish trend, right? If we're in a bearish trend, we know our extreme is going to be lying at lower highs, and our decisional order block is going to be lying before a new lower low is created. It's going to have that first push. Price will create some form of internal pullback before making a new lower low. Price will then distribute and sell, cause price to sell right through it. So we have that first push, second push, and our decisional order block. Typical decisional order block will be lying right where that second push came into play. The next type of decisional order block we have is the order block that lies after the lower low is broken. If this is our main trading range from this lower high to this lower low, we can clearly see that there's no internal second push here, but it does occur afterwards. So we have the first push, we have the second push. That's where you're going to want to identify, the imbalances, everything we've talked about so far, making sure there's two major pushes, two of the major imbalances, and then applying price to the charts properly. After we see this, we can expect price to either continue drastically selling down, or it can end up working out short term and then always come back to the extreme. That's a scenario that can always happen, and that's why I always prefer extremes, because there's not so much management. You just have to have trust in the analysis. And then, of course, the last type is the major imbalance. When you see a major imbalance created and you only see one meaningful internal push, two things you always got to think. You got to think, all right, well, there might not be a decisional in this case, so the extreme could be the only valid order block. Or the second thing, when you become more advanced, is think, all right, well, the extreme could be the only order block, but let me see if there's one candle that divides two imbalances that lies potentially after or before. Within that 35 to 70% retracement, let's see if an order block is lying there that's hidden. And that's going to be either lying after it, before it. It'll vary in different scenarios. But that single candle that has the imbalance, this is our first imbalance, this is our second imbalance, and it's the candle that doesn't start the imbalances. It's the candle that divides the first and the second. So they're two separate entities. Now let's do the applied understanding of our bearish continuation decisional order blocks. In this scenario, we have a high, low, lower high, lower low. So our question becomes, where's our decisional order block? Here. What we can see initially is our extreme order block is the order block that lies at the lower high, no other than exactly as the diagrams y'all have seen, lies right here, right? And then we see that this was, from a push perspective, we said we had one first push here. We had a retracement. This is our next second biggest push. So in theory, that tells us, all right, we know that we're going to be having an order block that lies before the lower low is broken. Where's the imbalance, right? Well, that's the first push, and we have our extreme order block. When we have that retracement in the second major push, is there an imbalance right here? No, there's no gap after, so it's not valid. We need to find the candle that did have imbalance that created that low to be broken. Is there a gap here? No. Is there a gap here? Yes, there is a gap that lies right here, and that is our bearish decisional extreme. We see that we have this low, this candle right here was the last candle within this push that had imbalance. We had a wick here, and a little gap, and it was literally the candle right before that caused the lower low to be broken. Price came right back up into it, mitigated it perfectly, and then ended up dropping. So these trades are really quick. That's why if you wait sometimes for a BOS and maybe identify an order block higher, it could just end up selling off. And that's where decisional order blocks become very effective, is if you're expecting price for whatever reason to keep selling all the way down, you want to look for a short pullback to a decisional. And this one becomes very, it's very clear once you can start painting the picture in your head and practicing all of these different types. Of course, our second example of our second type of order block is going to be after a lower low is broken. So again, squint your eyes, just imagine, where do you see the main impulses happening? Well, right here, we see this high makes a drastic, expansive sell-off. So this is that lower high that makes this lower low. We know that our first imbalance is right here, and this is clearly an extreme. This is the low that was broken as a result of the extreme order block. And then that's the first push. We see price come back for a small retracement, make that second push after the lower low is broken. Now, because we're focusing on that second internal push, where's the order block with imbalance? Well, it's pretty obvious in this instance. Here's the order block. The imbalance is just afterwards. Price, right, comes back to it and then continues lower. I know there's a lot of information, but if you want to rewind this and remember what I said about a few slides ago when I was referencing why type 2s have a lot of confluence, it's because this could be a 5-minute range structure, but maybe, and this could be the 5-minute range structure, and this could be the decisional of the 5-minute. But maybe on the 1 minute, internally, if this is your pro trend, you have 1 minute lower low, lower high, lower low. And then price comes back to that 1 minute lower high to go lower. That is what I consider a double confirmation, double confluence, powerful order block. When you have an internal structural extreme, such as the 1 minute lower high, that is where an order block is, and it aligns with your higher time frame structure, and it comes in the form of decisional. That's very powerful. That's a very, very good that's a very good way to gauge if it's going to work or not when we're talking about probabilities. Some of my favorite types right here are type 2 order block that occurs after a lower low. Great stuff. Comes back to mitigate, of course, and then sells off drastically. Of course, a third type is then our major imbalance. Over here, we see that we have, this was a previous lower low. We had a lower high that made a new lower low. So now we want to ask ourselves, when we have this lower high make a new lower low, where's the extreme first? Identify the extreme so you don't get tricked. Well, we see that clearly this is where that first major push happened, right? First major push happened here. Second major push happened to cause it to break. Now, how much imbalance do you see within the sell-off? Well, we have one imbalance here. We have the second imbalance here. We have the third imbalance here. and then price breaks. When there's major imbalance and price is heavily inefficient because of that imbalance, you always want to be focusing where that second imbalance is occurring, like we've been talking about. And because we have three imbalances, and we know the extreme is already taken care of, when that major imbalance happens, you can generally expect that extreme not to work. So let's shift our attention and focus to the decisional. Here, why this is not the decisional candle itself is because we have two consequential imbalances that occur afterwards, here and here. So that tells us, in this instance, we could actually be applying that type 3 imbalance for the major imbalance, identify that one candle of decisional that divides two imbalances before, during, or after it, right? So in this case, this candle has imbalance, the single candle right here has imbalance that lies right in the middle. Right after, there's another imbalance right here. So this candle divides the internal imbalance and the imbalance that lies outside of it in two. So it's a meaningful area for us to be identifying for price to come to react to in order to make new lows. Because I do identify this extreme. This move ended up selling off 400 or 500 pips afterwards. Or no, it was 1,000 plus, excuse me. This was GU, as you're gonna see here in just a few moments. So that's why these types of decisionals, the type 3s, are so powerful, but it takes a lot of experience to be able to get to this point. So do not fret, do not worry if you are like, oh, this is a lot, you don't need it. Apply these two, you will be golden. You will be golden. Adding more things in does not mean you're going to win more. So now that we have an initial application understanding of what these concepts are and the different setups of them, now we're going to go to the charts and go to TradingView and see how to scroll through and actually apply them. All right. So over here, we're going to start with that first type of imbalance, right? That first type of decisional. Now, when we're thinking about things from range and structure, we see that we have some form of low. We have a lower high. This lower high ends up making a lower low. In this instance, where would our extreme be? Our extreme, you might say, oh, this is our extreme, right? But notice, it was already mitigated. So now because there's no gap here anymore, this wick filled that gap, this is not the extreme. Where's the next area with imbalance? Your next area with imbalance is right here. So this would actually be your extreme. So now that we have the extreme taken care of, now we need to identify the decisional. In this case, when we're looking to sell off, where's our decisional and how many imbalances do we have? Let's count the amount of imbalances that we have after the extreme. We have one imbalance, we have two imbalances, and now we have, right, our third major imbalance right here. When we have three major imbalances, do not identify the last order block before that third major imbalance. So ask yourself, where are the main pushes that come into the market? Well, we see we have one major push here, one major push here, one major push here. So we have three major pushes in this instance, but which one is the best one to focus on? Because we know that this extreme order block is not the decisional, we don't even have to worry about the upper range of this push. So now what we're dealing with is we're actually looking at this push and this second push, right? But there's a key factor here. We have still the imbalance above, and we have an imbalance below. In this instance, we see that there's an order block that lies right at this low that ends up stalling a little bit, then causing price to drastically sell through. Because this is where we have two imbalances, one lying before it, telling us the extreme is just after it, and then we have one imbalance that lies after the low is broken, that tells us that this is going to be the correct order block. Because this is that last candle that caused this low to be broken, this is where we should look. We should not look here for a decisional, and although it might seem, again, you might be a little confused looking at this, I can promise you, this will not work when we get to a couple further sections, everything will come all together. But the main reason why is because we already have two imbalances, price is still inefficient in these areas above. If you identify a decisional, and let's say, oh, here's my decisional, here's my imbalance after it's a decisional, do not do that. If there are two or more imbalances above what you identify as a decisional, you have the wrong decisional. Just save it, write it, it is wrong. Your decisional should come and lie right before the second imbalance starts. So your first imbalance starts, your second imbalance occurs. This is where majority of the times your decisional is going to happen. Right before the second imbalance occurs. It's going to be the catalyst candle that starts it. So there's a lot of confluence here. And as we go through, the rest of the examples and then rewatch the previous ones, you'll see there's really just two imbalances in that candle that starts the second imbalance is your decisional, right? So now that we have this, let's now see the second example or the second type of decisional. So here, like we talked about, we have a lower high, we have a lower low. The picture that we looked at on the presentation, it's the exact same one, but let's take a further look at it. So GU, right, this is in September, late September, we have a lower high and we have a lower low. So we know structurally, this is our bearish range from this lower high to this lower low, this lower high to this lower low. So this is the range we want to be looking to sell in. Our extreme order block is obvious. It lies at the lower high, that makes the lower low. And our decisional order block in this instance, more or less ends up being, right, the 50% of the range. And what we do is we identify the first push, the second push, meaningful area for price to come back to. Additionally, where are the imbalances? First imbalance right here. Second imbalance right here. The decisional caused the second imbalance to happen, and it is a very valid decisional according to types, according to imbalances, according to logic when it comes to pushes. But furthermore, if I can actually go ahead and just replay this, let's go down to a 5-minute time frame. Right? If this is our main structure from this lower high to lower low, what does our internal structure within this range look like? Right? What does that internal structure look inside of this range? Internally, we see that we have a high, internal low, internal lower high, internal lower low. This factor alone, because of fractality, notice how a 15-minute decisional ends up being the extreme on a 5-minute structure, internal structure, this lower high that makes a lower low. That is that double confirmation I'm talking about. So these candles that we're choosing, it's not just, oh, here's an order block. There are, in all honesty, are 8, 9, 10 plus confirmations for every single one, majority of which we haven't, discussed yet. But this is how you make those decisional refinements. And one of the most important key pieces, everybody, is notice, had you chosen this as your order block, price would have never came to it. Why is that? Because for decisional and extreme order blocks, the only order block we know that must get mitigated is the largest one. So whenever you identify an order block, always zoom out to make sure that you identify the highest one. Now, that doesn't mean that the one you identified, maybe here, couldn't work out. It most definitely could. But always keeping in mind that price only needs to tap that highest time frame order block is what's going to ensure that you know that if price just drops from there, there's a reason from it. Doesn't mean you're entering. It just means that you have, all the ground, that's covered, and there's not going to be any surprises. So now let's go to the next order block, that type 3 order block, right? In this instance, we see that we have a low, a lower high, a lower low. Like we discussed, where is our extreme? Extremes lie at lower highs that make lower lows. Beautiful. So our imbalance, we have our first major imbalance from here to here. Great. Where's our second imbalance? Our second imbalance is right here. Okay. Do we have any more imbalances? Well, we have a third one, right? This is our third imbalance. Yikes, and then price runs away. So all of this up here is inefficient because of all the imbalance. So now how do we actually choose the right refinement? Now this was in April of this year. This is a trade I personally took, and I've seen this example so many times that I was able to actually capitalize on this before the drastic sell-off. So pay attention. When you see this order block and you see major imbalance for your extreme, just know that price won't come back up here. Always just make sure to note that. Here, where's your decisional order block? Well, we see that we have our first major push here from this high down to this wick. Price then retraces on a fractal level on the 5-minute. If I go any lower than this, it'll just cut me out and replay. So just imagine this high makes this low on the 5-minute, comes to make a pullback, and then it goes lower. So we have our first major push, we have our second major push. This is the order block that some of you guys might say this is correct. While this most definitely works, this is more just experience-based. Making that refinement doesn't mean that you identified it wrong. Not in the slightest bit. Always make that. But me knowing and having more experience when it comes to identifying these, I know because we have one imbalance here, we have our second and our third here. I know in this instance, it'll actually be a type 3 order block where we look to identify that large imbalance and identify the candle that separates the second and third imbalance. Here we have our second one. Here's our third one. Here's our candle that captures the first and the second imbalance respective to the range, not including obviously the extreme. What does price do? It ends up just selling off drastically. Don't get caught in all these FOMO. I want to sell. That is the point. They want you to think that. Have the patience that price will come back to your area. And of course, price ends up doing what? Pulls back, ends up coming back up to our area, mitigates our type 3 order block, and thereafter, right, it just mitigates and then it absolutely sells off a cliff. So that is our type 3 major imbalance order block. Advanced concept, but works phenomenally when you know how to apply it. Now let's go back to the presentation and identifying decisional order blocks and reversal structure. Now we've done continuations. Decisionals are much more advanced than extremes because extremes are very straightforward. Keeping it simple, stupid. Now let's talk about reversals. So decisional order blocks and reversal structure always have the same locations as continuations, but they appear after a BOS. So those same types of decisionals that we've been identifying, just know that they apply very similarly to the reversals. Locations are the same, but we always need to keep in mind that reversal setups, whenever you see a BOS, they occur on a lower time frame because it's the result when price is trying to create a pullback or to resume the higher time frame structure. If you're bearish on the higher time frame and you see a BOS on the internal trend and price starts to develop bullish structure on a 5-minute within a 1-hour sell range, just know that's a pullback for then price to resume structure once it breaks structure on that 5-minute again to resume the 1-hour trend. So just know that's just always important to know that reversal trading is always going to be much riskier, and just stay in the direction of the trend. However, the highest probability decisional order blocks for reversals are the type 2 and another type of order block that we call S2D and D2S order blocks. that is going to be the next order block video that you're going to be learning about. However, keeping in mind this, order blocks in this nature from decisional and reversal structure, they're still the lowest probability if you try and apply them with structure alone. It's like a double whammy per se. If you're trading a reversal and you're trading an extreme order block, you have a much higher probability of getting the right order block rather than trading a reversal trend or a pullback, and then you have 2 or 3 different types of decisionals, and you might not know which one's going to work. That's where I always emphasize identify the extremes and just trade those, because if you get really good at extremes, decisionals are going to be a walk in the park. But extremes always have the highest trades, the highest wins, all the above. Now, let's finally review the key takeaways about decisional OBs. So the reversals of our decisionals will be discussed in the next lesson, as they directly correspond to the best and highest probability decisionals. Everything that you've learned about so far with the 3 different types, you can still apply them for the reversal trades after BOS, but they become significantly riskier if you don't know how and when to apply them. Now, decisionals following the higher time frame are the best ones to take. Keeping it straightforward, the best ones to take. Anything counter trend, you're just really risking it. So stay with the trend, and that's what I would just follow. Type 1 and 2 decisionals are the most probable. We're talking about continuation trading. Always look for your order block that comes before the structural break. You know, if you're in an uptrend, before the higher high is broken, identify your decisional there. Before lower low is broken, identify your decisional right before that causes it. They're the most probable ones, continuation structure. Decisional order blocks can have 3 out of the 4 core features to be valid. The only one that they do not need to have is the liquidity sweep. Order blocks themselves for decisionals do not need to sweep liquidity. However, extreme order blocks must always take out liquidity. The only decisional order block price must mitigate is the largest one. Embed this in your brain because no one else will teach you. The only order block that will ever need to be mitigated is the largest one. Now, while we can become very precise and very accurate with our refinements, that you'll be learning in this section, that doesn't mean that price has to do what we want it to. So we have specific procedures for how to enter trades based off of different situations and situational analysis that we endure. So always make sure, no matter however you make your refinements, that you always zoom out to the highest time frame and ensure that there's no decisional besides the one you identified. If you're on the 30-minute and you see a really good decisional and you identify it, great, keep it. But maybe zoom out to the 1 hour, even the 2 hour. The 2 hour is one of my favorite time frames. I've used it for the past 3 years, absolutely love it. Zoom out to those time frames and make sure that there's no larger decisional that needs to be mitigated. And by doing that, you're going to ensure that you're not going to be over refining and you're not going to be missing out moves. And then being in hindsight, that's why it happened. Very key point. One of the most important things about everything relating to order blocks. Likewise, compared to the extremes, price can mitigate order blocks more than once. Although it's not ideal, the reason why price can mitigate an order block, it can run away, but then it can actually come deeper back into the order block, is not because of some made up 50% order block has to be mitigated 50%. It does not. That's theory based because everyone thinks that's where the volume of the candle is. The truth is order blocks that end up coming back to be mitigated that were already mitigated. The reason is because there's a refinement on a lower time frame that hasn't been mitigated yet. So like we just talked about here, the only order block that needs to be mitigated, the only order block that needs to be mitigated is your highest time frame order block. Does that mean it can just mitigate the higher time frame, run away, then come all the way back to then go to maybe your 30-minute? It most definitely can, because it's still valid. And that's exactly what's happening right here, is when price comes back into an order block that's already mitigated, it's purely because there's a lower time frame order block that is left and hasn't been mitigated. All being considered, decisional OBs expose your risk profile exponentially. Compared to extremes, there's only one order block that is an extreme in buy or sell trends, always at a lower high. Decisionals, there are 3 types of decisionals. So by increasing your risk exposure, meaning this can be an order block, this could be a decisional, this could be a decisional, you now have a 33% chance potentially, just speaking aloud, of getting a trade right compared to maybe a 50-50 when it comes to, extremes. Just by focusing on one thing, your probability goes up. Now, of course, there's other external factors to that, but just at initial glance, less equals more. That's why I prefer extremes. I encourage you guys to always trade the same OBs routinely. Don't switch, say, I want to do this decisional this time, this one. Remember, as you guys will learn how to potentially ping pong, that is not my style. I used to do that. I can do that if I choose to, but there's a much smarter way to trade, and that's how I developed my own edge in algo trading, soon to come. But always just trade the same setups. That's what it's about. And that you're going to learn that it's going to exponentially increase your learning curve, how you're actually approaching the charts, and your overall consistency. Another key point, never set limits on decisional order. If you're going to set a limit, only set it on an extreme. That is it. And only a few pips before. We haven't even talked about entries yet, but because it's relevant to decisionals, never set a limit on a decisional, because you can have a couple different decisionals and you might not know which one it is. So what do? Set a limit on both? No. Maximize your time, maximize your money. Don't take several losses before one win. In order for us to win more, we just have to lose less. Set your limits on extremes, because if your extreme doesn't work, you've simply identified the wrong structure. If you identify the wrong decisional and you have several limits, you don't know what's going on. You're just hoping at that point, it's something that needs to be addressed and fixed. It's a common thing that a lot of people run into. So never set limits at decisionals. The last thing, and more advanced. But if you identify a decisional order block in a bullish and a bearish range, you never want to take a decisional order block where the current structural point mitigated a previous decisional. Example, if you're in bullish structure, you have a higher low and you have a higher high. You've identified your extreme, you've identified your decisional. Great, that is the first step. The next step that you need to make sure of is before you say, oh, the decisional is the end all be all, look at that higher low and look to the left to see what it mitigated. If it reacted from a previous decisional and went higher, never take a new decisional, where the structure point of the current range mitigated a previous decisional. And I'm using my hands like I'm doing sign language. That will be something I'll be covering later on. If you understand, great. I'd love for you guys to share your charts, show me what you learned. But these are the big and major takeaways all about order blocks, all about decisional order blocks, the major key points. Now, obviously, I can teach you everything that, and will continue to teach you everything that I have up in my noggin. But this comes down to experience. You can't just expect to learn and then make all the money in the world right after. Learning is the first and probably one of the most difficult challenges. But if you can learn, the next thing to do is be able to apply it with your own experience. And the more times you practice, the more times you backtest, the better you're going to be prepared for these daily life scenarios. You're going to be applying the same things every single day in virtually the same way. So that being said, everybody, hope you guys enjoyed today's video. Decisional order blocks, one for the books. You guys will know exactly later on which ones will work, how they'll work, when they will work, and it's all about the algo. Right? So give me a comment down below, share in Discord, message me what your favorite part about this video was, which some key takeaways were for you, what was eye-opening, and I look forward to seeing you guys in the next video.